Today, crypto prices fall for a second day as rising inflation worries investors. South Korea issues an arrest warrant for Terra Labs co-founder Kwon. And how will the merge change funding for Ethereum projects? We asked Michael Anderson of Framework Ventures. Welcome to CNBC's Crypto World. I'm Pippa Stevens. It's another red day in the crypto market as investors fear rising inflation and another rate hike from the Fed later this month. By noon Eastern, Bitcoin slid to the 20K level, Ether dipped to $1,500, and Polygon fell to 85 cents. Okay, let's talk about the top stories. First up, the hunt is on for Kwon, the main developer of failed cryptocurrencies Luna and Terra USD. Today, a South Korean court issued an arrest warrant for the Terraform co-founder for allegedly defrauding investors, a prosecution spokesperson told Reuters. Now, this comes 4 months after the collapse of Terra's stablecoin UST and its sister token Luna, which led to losses of about $60 billion. The controversial algorithmic stablecoin was supposed to be pegged to the US dollar, but it decoupled from that target price, triggering a huge crypto crash. We reached out to South Korea's Supreme Prosecutor's Office and Terra USD. By noon, we hadn't heard back. Following today's news, the revived Luna token plummeted as much as 50%. Next, Canadian Prime Minister Justin Trudeau is taking aim at his political opponent's support for Bitcoin, calling it irresponsible. In a speech on Monday, Trudeau referenced newly elected Conservative Party leader Pierre Poilievre's disdain for fiat currency. Trudeau said, quote, telling people they can opt out of inflation by investing their savings in volatile cryptocurrencies is not responsible leadership. Anyone who followed that advice would have seen their life savings destroyed. Poilievre was elected as leader of Canada's Conservative Party in a landslide on Saturday, and he made crypto's supposed ability to fight inflation a central part of his campaign. Trudeau and Poilievre will face off in 2025 during Canada's next national election. Last, New York City's Museum of Modern Art might sell millions of dollars in artwork to buy NFTs. According to the Wall Street Journal, the MoMA is looking to sell at least $70 million of art from its collection, and in turn, the museum will invest heavily in its online footprint. Sources told the Journal that one potential option is investing in NFTs even after the museum sat out the wave of new digital art in 2021. Meanwhile, other big-name museums like the British Museum in London and even auction houses like Sotheby's have embraced the technology in recent months. All right, on to our main story of the day. We're in the final countdown for the merge, which is expected to finish sometime tomorrow morning. As the transition to proof of stake opens the doors for new projects and upgrades on the Ethereum network, Crypto World wanted to find out whether VC firms are changing investment strategies and what projects they're most likely to fund. So fellow host Mackenzie Sigalovs spoke to Michael Anderson of Framework Ventures to find out.
Okay, so obviously everyone's awaiting the merge. Tell me, what's your investment strategy looked like for the Ethereum network projects in the run-up to this event?
Yeah, well, I think the thing to note here is really this represents one of the largest shifts technologically for a major asset like Ethereum in the crypto space writ large. I think one thing that we've seen historically from institutions is there's a desire for stakeable assets. What Ethereum will have after it moves through this merge upgrade process is the number of transactions, the amount of transaction throughput going through the network will be proportional to the amount of stake that you can earn by staking your Ethereum assets. And so I think it would make a lot of sense that institutions will probably gravitate more towards this asset as a stakeable one as they have with other stakeable assets.
Now, will the merge dramatically change how you think about investing in Ethereum projects after the fact? Are there things that you're perhaps going to be more interested in investing in?
I think over the last couple of years, Ethereum has been throttled in terms of the amount of transactions that can go through it and the cost of those transactions, making it at times almost unusable for consumers and the applications that are building on top of it. What this merge represents is a major milestone on the roadmap to scaling for Ethereum. And what will happen over the next 6 to 12 months is actually Ethereum will be able to get to some of the benchmarks that you've seen with some of the other competitive base layer chains like the Avalanches and Solanas of the world. And what this enable for the application developers is having a fair trade-off between Ethereum or one of the other base layer chains. And I think that just makes it a lot more competitive in the ecosystem of smart contract.
Right. And what are your expectations for developer interest when the merge is all said and done?
Well, I think it largely remains the same, both from an institutional perspective, from a development perspective, as well as an individual developer perspective. The ecosystem and the development process will be largely the same. I think one of the other major upgrades that occurs with this change is there's about a 99+% reduction in the energy usage of the Ethereum blockchain, making it just a lot more palpable for people who want to build on top of it and distribute their applications on top of the network.
Now, you mentioned earlier Avalanche and Solana. Do you think that this puts to rest a lot of the talk of Ethereum killers? Obviously, with the merge, we're not going to see overnight greater scalability or faster transaction speeds or even cheaper transactions, but it certainly paves the way to roll out technologies that will enable those features to become a part of the Ethereum blockchain. Long has been a critique of that blockchain in particular. So what does this mean for Ethereum in terms of its rivals?
Well, I think you hit the nail on the head. This change itself doesn't represent a major change in the number of transactions or the cost of those transactions through the Ethereum network. What it does represent, though, is the paving of the way for these new upgrades to go through. And there's one in particular called EIP 4844, which would actually reduce the amount of transaction costs for rollups built on top of Ethereum. And rollups just represent the major ecosystems that users will be interfacing with the Ethereum ecosystem broadly. And the cost of using those rollups will actually be reduced 10 to 100 times, which would represent an even deeper discount to the amount of transaction costs for some of these other competitive base layers.
Pivoting to the crypto space more broadly, I want to ask you about how VCs have handled the crypto winter. So earlier this year, we've had many VC firms on who said that the winter was the time to build and to invest in quality products. Has this investment strategy materially shifted since May when things really headed south?
Well, I think it forces the question as to what categories make sense to invest in. It really does provide a sobering effect to the broader ecosystem where some of the crazier valuations or the crazier concepts maybe just don't have staying power during this period of time. But I think you're exactly correct. The advice that we give to all of our portfolio founders is continue to build, put the blinders on, have enough cash in the bank to be able to survive however long this may last. But this is also the best time to be building. We actually started Framework in 2019, which was just coming out or still in the bear market of that period of time. And we saw some of the best investments over that ecosystem and over that life cycle. And I think that we're going to see some of the best investments be invested in during this same period of time.
So how has due diligence shifted with the collapse of Terra and others? Is it harder for projects to get funding in the first place?
Well, I think there's just less funding to go around right now. And so, yes, it is harder. I think one of the things that usually happens during a bear market as well is we have the opportunity of spending more time during due diligence. The deals aren't happening as quickly, which means that we can get to know the teams better. A lot of these founders have also already been in the space for a long period of time. And so we already know them. We know, what they're thinking about and what they're working on. And they're just coming to market now. And so having that track record of knowing them for a longer period of time, being able to spend time with the team during the due diligence process and really kind of kick the tires on some of these things, I think makes for prudent investments. And over the last year prior to the winter, I think that we just didn't have enough time to be able to do that in all cases.
Okay, that's all for Crypto World today, but we are back again tomorrow and we'll see you then.